If you qualify for a VA loan and you're not using it, you could be leaving one of the best home buying benefits in America on the table. VA loans are powerful, but they are also misunderstood. A lot of people know the big benefits: no down payment, no monthly mortgage insurance, flexible guidelines, but what they do not always understand are the rules. And when you do not understand the rules up front, that is when surprises happen later. So in this video, I want to walk you through VA loan requirements in 2026 in plain English. We're going to talk about who qualifies, credit scores, debt to income ratio, residual income, funding fees, closing costs, property requirements, VA appraisals, and how you can use a VA loan more than once. So that's a lot we're gonna go over. And before we get into it, if you're active duty or veteran or surviving spouse, I just wanna say thank you. Truly, I appreciate your service and the sacrifice that came with it. My name is Sarah and I'm a realtor and loan officer, and my goal is to help you understand the buying process so you can make smart decisions and avoid costly mistakes. So let's start with what a VA loan actually is. A VA loan is backed by the Department of Veterans Affairs, but this is important. The VA is not the one lending you the money. The actual loan comes from a lender, bank, mortgage company, credit union, or mortgage broker. And this matters because a lot of veterans think they are talking directly to the VA when they're really talking to a private lender. Just because a company has VA or veteran in the name does not mean they are the VA. Some of those companies are great, some are expensive, and some have extra rules that are not actually required by the VA. So one of the first things I would tell you is this: do not just Google VA loan and call the first company you see. Get more than one quote. Work with someone who understands VA loans and make sure they're explaining the full picture, not just trying to get you into a loan. You can also click the link down below and schedule a call with me. If you fill out that information, I respond within the next 24 hours, and I'd love to go over this with you as well. So now let's talk about who is actually eligible. You cannot use VA financing unless you are eligible. Eligibility depends on things like when you served, how long you served, and the type of service. It can also apply to National Guard members and certain surviving spouses. I have seen people assume they do not qualify when they actually do, and I've seen the opposite. People assume they will qualify and later find out they do not. And the only way to know for sure is through your certificate of eligibility, also called the COE. Your COE does two important things. First, it confirms that you're eligible, and second, it shows your entitlement. So that entitlement matters because it matters especially if you have used a VA loan before or plan to use one again. For example, if you bought a home years ago with a VA loan, sold that home, and paid off the loan, you may have your full entitlement restored. But if you still own that home and turned it into a rental, part of your entitlement may still be tied up in that property. Your lender can usually pull your certificate of eligibility for you, or you can request it by yourself. But either way, that document is very important. So now let's talk about something that gets misunderstood all of the time. People hear that VA loans have no loan limit. And technically, if you have full entitlement, the VA no longer caps the loan amount the way it used to. But that does not mean you can buy any house you want. You still have to qualify. So let's say someone makes $90,000 a year, has a car payment, student loans, credit card debt, and other obligations. They're not automatically going to qualify for a $1.5 million home just because VA does not have a loan limit. The VA may remove the loan cap, but it does not remove the income requirement. The program is powerful, but it's not magic. So now let's talk about credit scores. The VA itself does not set one specific minimum credit score, but lenders can, and that's where people get confused. Many lenders have what are called overlays. That means the lender adds their own rules on top of the VA guidelines. So two veterans could have similar income and similar debt, but if one has a 720 credit score and the other has a 580 credit score, the experience may look different. The lower score borrower may need more documentation, they might have stricter underwriting, and they may receive a higher interest rate. So yes, VA loans are flexible, but credit still does matter. So if your score is under 600, that does not automatically mean you cannot buy, but you should expect the file to be looked at more carefully. Now let's talk about debt to income ratio and something VA cares about a lot: residual income. Most buyers focus only on debt to income ratio, and that is how much of your gross monthly income goes towards debt, including your future housing payment, car payments, credit cards, student loans, and other monthly obligations. But VA also looks closely at residual income. Residual income is what you have left after your taxes, housing payments, and monthly debts are paid, and that matters. So let me give you an example. Two buyers could both have a 50% debt to income ratio. One makes $8,000 a month and barely has anything left after bills. The other makes $15,000 a month and still has several $1,000s left over. Same debt to income ratio, very different financial picture. VA understands that, and that is why sometimes you will see VA approvals that look surprising on paper. A borrower may have a higher debt to income ratio, but strong residual income makes the file stronger. So if your debt to income ratio is higher, that alone does not automatically disqualify you. It depends on the whole picture. So now let's talk about one of the reasons VA loans sometimes gets a bad reputation, and that's the VA funding fee. VA loans do not have monthly mortgage insurance, which is a huge benefit, but most borrowers do pay a one-time VA funding fee unless they are exempt. The most common exemption is for borrowers receiving service-connected disability compensation. If you're not exempt, there will usually be a funding fee. For first-time use with zero down, that funding fee is 2.15%. So let's use easy numbers. If you buy a $500,000 home with zero down, a 2.15% funding fee would be $10,750. Most buyers roll that fee into the loan because VA allows it. So instead of financing $500,000, you may be financing the $510,750. That's important to understand because if you put zero down and finance the funding fee, you may start with very little equity or even negative equity. That may not be a big issue if you plan to stay in the home for a while, but if you think this is a very short-term move, you need to think that through carefully. In my opinion, VA loans often work best when you have a longer-term timeline. Now let's talk about another misconception. No down payment does not mean no money needed. A VA loan can allow you to buy with zero down, but that does not mean that there are no closing costs. You may still have prepaid taxes, homeowners insurance, escrow fees, title fees, appraisal costs, and other closing expenses. For example, on a $450,000 home, closing costs could easily be somewhere around 1, 2, or 3% of that purchase price, depending on the market and the situation. Sometimes sellers' concessions can help, sometimes lender credits can help, but you need to know what those numbers look like before you start making offers. That is why talking with a knowledgeable lender early matters so much. A good lender is not just going to tell you, yes, you qualify. They're going to review your pay stubs, bank statements, credit reports, debits, income, and certificate of eligibility. They should be able to show you how much home you may qualify for, what the payment looks like, and what cash to close may look like. Now let's talk about property rules. VA loans are for primary residences. You cannot use a VA loan to buy a pure investment property. But here's a common question. Can you buy a home, live in it, and rent it out later? Yes, in many cases. The key is your intent at the time you buy. If you buy the home as your primary residence, move in, and later get transferred, relocated, or your life changes, you may be able to rent it out later. But you cannot buy it with the intent to immediately use it as a rental property. Intent matters. VA also has minimum property requirements. That means the home needs to be safe, sanitary, and structurally sound. If a property has no working heat, major electrical issues, serious safety hazards, or major condition problems, that can create issues with VA financing. Fixer-uppers are not always impossible, but they need to be evaluated carefully. And condos are another thing to watch. If you're buying a condo with a VA loan, the condo project needs to be VA approved. Not all condos qualify. This is where having the right real estate agent matters. You want an agent who understands VA financing, knows how to check condo approval, and understands how to write a strong VA offer. I see agents misunderstand VA all the time, and that can hurt buyers. Now, let's answer another common question. Can you use a VA loan more than once? Yes. VA loans are not just for first-time homebuyers. You can use them more than once, but it depends on your entitlement. If you bought a home with VA financing, sold it, and paid off the loan, you may be able to restore your full entitlement and use VA again with zero down. If you kept the home and turned it into a rental, you may still be able to use VA again, but you might need a down payment depending on how much entitlement is available. So this is another reason your certificate of eligibility is so important. So now let's talk about VA appraisals. People love to say VA appraisals are harder, and here's the truth. VA appraisers are looking at value, but they are also looking at the minimum property requirements. They want to make sure the home is safe, sanitary, and structurally sound. Most issues happen when sellers or agents do not understand VA loans. If you're using VA financing, you want to be careful with homes that clearly have major condition issues. It is not that VA is bad, it is that expectations need to be clear from the beginning. Now, what does the VA loan process actually look like in 2026? First, you talk to a lender who understands VA loans, then you pull your certificate of eligibility, you provide income documents, asset documents, and authorization to review credit. From there, they tell you what you may qualify for, what payment range makes sense, and what your estimated closing costs may look like. Then you start shopping with a real estate agent who understands VA buyers. Once your offer is accepted, the loan goes through underwriting, the VA appraisal is ordered, inspections happen, and if everything checks out, you move towards closing. I want to be very clear about this. It is never too early to start the pre-approval conversation. Even if you're 6 months out or 9 months out, start early because it sometimes needs work. Because if something needs work like credit, job history, savings, or documentation, you want time to fix it. So let's recap the VA loan requirements for 2026. You need to be eligible, and that is confirmed through your certificate of eligibility. The VA does not set one universal minimum credit score, but lenders may have their own requirements. You qualify based on income, debts, and residual income. Most borrowers pay a funding fee unless they are exempt. The home must be your primary residence. The property must meet VA standards. Condos must be VA approved. And yes, you can use a VA loan more than once if you have available entitlement. If you qualify for a VA loan, it can be one of the best tools available to help you become a homeowner. But like anything else, it works best when you understand how it actually works. If you're planning to use a VA loan this year or you're wondering whether you qualify, leave your questions in the comments. I would love to know where you are in the process. And if you're just starting out and want to talk to a loan officer, fill out that link below and I'll respond within 24 hours and we can get on a call together. And again, if you have served, thank you. I truly appreciate it. Thank you for watching and I'll see you in the next video.